All right, welcome back. You're watching The Big Idea now with the global economy facing ongoing economic crises and investors adopting a risk-averse strategy. Today, we delve into its impact on global M&A activity. We examine economic conditions that are conducive to M&A, explore South Africa's landscape, and dissect the multifaceted aspects driving M&A trends while forecasting the outlook for 2024. All this now with the Chief Executive at Corporate and Advisory at Deal Leaders International, Andrew Bahlman, and Hannes van den Berg, who is the head of SA Equity and Multi-Asset at 91. Thank you both for your time and good afternoon to you.
Afternoon.
All right, I think I'd like to get a snapshot of M&A activity globally and here at home. As it stands today, in my mind, we do see more acquisitions than mergers. But all in all, are we seeing much activity? Hannes, we'll start with you.
Yes, I think also base effects are playing quite a big role. I mean, if you just go into Bloomberg and you track M&A activity globally, in the US, there's a lot of increase in, as you say, more acquisitions than mergers. We know about the banking crisis, sort of small banks that started to struggle because of higher interest rates. The likes of JP Morgan and other big banks came in and consolidated some of those banks into their bigger structures. So those banks essentially had to be bailed out, if you want to call it that, last year. So in the US, if you look at numbers on Bloomberg, there's a almost 60% increase in mergers and acquisitions. Europe, also above 60% increase. In Asia, it's down for specific Asian reasons. So US and Europe up quite a lot, and it seems like the banks are quite topical from a sector or industry perspective in some of these mergers and acquisitions.
Thank you for that, Hannes. Andrew, keen to get your thoughts here?
Yeah, it's an interesting one. Obviously, we play more in the privately owned space. There's definitely been an uptick. I think there was a lot of, particularly in the middle of last year, those couple of months, a lot of uncertainty. But there's definitely, we're seeing a large increase, particularly in international interest in South Africa. And if we look at our, colleagues around the world through our network, they're definitely seeing an uptick, which is really positive, and in multiple industries, which is hopefully a sign of recovery for the industry.
When the world experiences the kinds of shocks that we have from a pandemic to high inflation and really money that's become super expensive and maybe just a little bit more expensive for the foreseeable future, what is that likely to do to M&A activity, Hannes?
Yeah, I think you've summarized it well. Our view is from a cyclical or cycle view in the cycle perspective is that we are late cycle, slow growth kind of environment. High interest rates is there to cause a bit of a slowdown to get inflation back under control. So certain companies are struggling. They're looking for partners, and also it's an opportunity for those bigger companies to potentially consolidate and acquire some of those companies that are really struggling. It's also that part of the cycle where, because of funding costs being high, there are not a lot of buyers around. But then those that are taking the sort of medium to longer term view, saying that the cycle is potentially turning, interest rates in our minds people are starting to talk about interest rate cuts. And that means that your funding model becomes cheaper or more affordable, and maybe not a bad time in the cycle to look to acquire. So those that are in a position to do so are making use of where we are in the cycle to position themselves for the next phase, which is potentially the recovery, growth, and expansion phase. And then they're bigger, and they've made the right investment decisions by acquiring companies at this stage of the cycle.
Fantastic. Andrew, I'd like to bring you in here. Let's talk about now local appetite. Here in South Africa, what we have seen is acquisitions from international companies coming to scoop up companies listed on the JSE, leading to delistings. Those are the big stories that we will hear about, we'll see in stock exchange news. But is there more to it here at home?
I think there is. I think you look at the sentiment across the board. So obviously we've seen the big mega deals by South African definition and standards, but there's definitely an uptick for us as an investment destination. We're seeing probably more now than previously. Very because of the weak rand, the exchange rate, those companies in manufacturing that now become globally competitive seem to be attracting a great deal of interest. Interestingly enough, Africa is still a big play, and in certain industries we're seeing South Africa still being that springboard. And it's quite an interesting one, because I think when you look at those mega deals, there's paper changing hands, but fundamentally, what does it actually mean for the impact to employment, growing our GDP numbers and the likes. And then you look at that I suppose, middle band that we're seeing incredible growth. So almost despite what all the metrics are telling us, that does make it a little bit counterintuitive. But there seems to have been a rejig almost, globally around where companies are looking to invest. The appetite to potentially take on risk if you've got the capital and one is pricing in that risk. And if I look in the sectors we're playing in, we're seeing as much international interest now as we did probably 6-7 years ago, which is quite an interesting dynamic. Again, it's an isolated view, but always look for the glass half full. I think whether it's good or bad, I like to think it's good.
Hannes, I just want to get your thoughts on this one as well. As Andrew says, we are still seeing appetite for South African businesses. I'm keen to get your thoughts on the companies that we're seeing delist. As Andrew says, what does this mean for jobs, our own ability to own our entities, to grow our economy, productivity, money moving within South Africa, staying within South Africa? Is this a bit of a tale of two cities? We're happy at one point that we're seeing this activity, but should be concerned that companies aren't staying in local hands.
Yeah, no, I think Andrew summarized it quite well. Recently in the listed space, we've seen the Canal Plus approach for multi-choice that are in the papers. There's the Distel transaction, Pioneer Foods transaction that happened, Consol, Afrox. There's lots of transactions that have been happening over the last 12 months. If you just take a step back, people tend to forget the quality of management teams, the brands, the distribution networks, the infrastructure we have in South Africa. It's a bit of sweet and sour to answer your question, because companies such as Anglo American, British American Tobacco, Richmond, they've got their roots very much from a South African perspective as well, and strongly South African businesses. These are brilliant businesses that are competing globally. We've also had some businesses that are startups in South Africa, such as Capitec, that's grown into a phenomenally strong business with a good business model that foreigners will really sort of appreciate. And therefore, given that we've got these qualities in the South African setup, the sweet and sour means that we get some of these businesses bought out or approached by global companies. Take the Bidcorp example as well. Bidcorp now being split between Bidcorp and Bidvest. Bidcorp is a global business. Yes, Bidvest is more locally focused. That's another example of our very good, well-managed and run business has managed to split itself up and prove itself to the rest of the world, and competes with food services businesses on a global scale. Unfortunately, as these companies get taken out, our universe of listed stocks is shrinking. We need more of the Capitex, the Bidcorp stories of the world, those kind of businesses to make their way through to our exchange and be listed here as investment opportunities. But that's a whole different debate on why we're not getting more and more of these listings.
Absolutely, a whole different debate, but one worth having, actually, Hannes, and maybe we should schedule that conversation. Guys, I want to speak about valuations. SA Inc. has been beaten, and I'm keen to find out, Chad, these M&As that we are seeing, are we seeing, they're moving through at fair value, at good premiums? Because SA Inc. and also, I guess what we're seeing with South Africa's reputation with load shedding, the rand also, being weak and very volatile, a currency I call rogue, and I'm keen to get your thoughts on this. Are we seeing, these companies being sold off at their fair value with good premiums for those who should be getting them? Hannes, we'll start with you here.
Yeah. It's a difficult one. Obviously, these transactions are happening because people feel there's a lot of upside, and they're getting them at a very reasonable, or in their minds, probably a cheap price. Those on the sell side or the selling side, the current shareholders will always want more and believe that there's synergies and all sorts of upside that needs to be paid for. I think where we are in the cycle, SA is priced in a lot of pain, whether it be load shedding costs or high interest rates or weak consumer environment or just political uncertainty, and that means we screen quite attractive from a valuation perspective. We're right at the bottom of the pile when it comes to valuation and being cheap. But having said that, those valuations need to stack up for these companies to deliver growth going forward. And in the case of MultiChoice, the business is from an operational perspective. In the African environment, they need capital. They need to grow. There's a lot of questions about the MultiChoice business model in South Africa, with consumers being under pressure, the premium bouquet, and how much people were willing to pay for it. But for Canal Plus, they've only got 7 million users in Africa. There are 22 million users that MultiChoice has already got in Africa. So that gives them scale And there are lots of synergies for a company such as Canal Plus to come, for example, and buy out MultiChoice. So from a buyer's perspective, there's upside and synergies. From a seller's perspective, we will always feel they're getting it for way too cheap. And there are other examples in the South African market as well, where in general we think the listed space is trading very attractively priced.
Andrew, keen to get your insights on this one.
Yeah, just building on what Hannah said, I think, I guess it all depends. It depends who the buyer is, so you've got to kind of separate between, is it a financial investor or is it a trade buyer? Because if there's a time frame on that exit, the pricing is going to be impacted by leaving enough for the next exit. And also, the view, we see a lot of on-balance sheet investors happy to wait 10, 15 years for returns. But the number one driver is around growth. And I think, the risk has been priced in. If the target can deliver, great growth, then that can be priced into the valuation. And then also, I think a big driver around SA Inc.'s impact, I guess, from a country risk perspective is the mix of revenue that's generated by the targets. So if you've got a rand-based overhead structure, but you're generating hard currency, in other territories, that typically would command a better valuation. So yeah, I still think there is value to be had. We're looking at the deals we're doing. I think the pricing is good, but again, it just depends on the targets and those synergies. I think the Canal Plus example is a very good one, because there should be some relatively quick value unlocked for Canal Plus, through that type of transaction.
I'm also keen to weigh in on what we might be seeing in terms of mega trends around the world. There are themes that we keep hearing about, AI and the likes of EVs. These are all things that we read about often. They are emerging. Is this where opportunity could be versus traditional sectors like mining, for instance, comes to mind here? If people are looking for opportunities, if people are looking to sell or buy, where are we seeing deals being concentrated, Hannes?
Yeah, you touched on the mining sector. More recently, the drive to become more sustainable and decarbonization has been quite big in some of the mining companies' strategies. So the way in which coal deals have been happening and spin-offs in coal transactions have been happening globally was quite a theme. And decarbonization and 2030 and 2045 commitments is what I think is driving a lot of consolidation, and also capital allocation in some of those sectors. You mentioned the tech space. There will always be smaller startup tech companies, and the bigger companies want to consolidate those fresh ideas from entrepreneurial driven businesses into their bigger frameworks and get those ideas onto a bigger, broader platform that can scale. So I tend to think those deals, and as you mentioned, AI, one of the themes more recently, chip manufacturing and the semiconductor space being, benefiting from a lot of that. Those themes I tend to think, and where the world is moving towards from both a sustainability as well as a technology perspective, will tend to continue, and increasing productivity and optimizing structures, and especially post COVID and with a lot of geopolitics going around at the moment, supply chain management is super important, and this whole deglobalization, making sure you can supply and manufacture more locally is definitely driving a bit of a theme, which will lead to public sector, private sector spaces all looking to acquire and to consolidate some of those businesses into their business models.
Andrew, and what are you seeing on your end?
Yeah, similar. I think it's, I think there's, depending on where you look, and there's almost like a tale of two cities, as you mentioned earlier. I think you got your traditional play, and mining services. I agree with Hannes. We're seeing a big play towards the ESG component of it, and the ability to make it a lot more carbon friendly, if you like. The renewable space, in our part of the world, I think it's still quite uncharted as from a traditional M&A space versus your project finance type space, but that's definitely an area. I think fintech, technology and the likes will always be one of those. But I agree. I think a very hot sector is around your value chain control, logistics and the likes, because I think we have seen massive turmoil globally around that, and inventory levels needing to be increased to mitigate those risks. And we still see medical, pharmaceutical and the likes. I still think there's no one's getting healthier, unfortunately, so that seems to be attracting components. And like I said, in certain parts of the manufacturing sector, I think if you've got South African companies that are globally competitive and are run efficiently with export capabilities, we're seeing, because of the challenges around logistics and duties around the world. That becomes an interesting target.
I think somebody at Harvard Business School, he coined a term called VUCA. It's volatile, uncertain, complex, and ambiguous. And it's the world that we find ourselves in today. And I think it might just be the way the world is going. I'm keen to find out about that as we see a heightened risk around the world, geopolitical complexities that we have never had to contend with. What does that do to a sector like M&A, and does that even change the considerations that one might make when they're thinking of buying or selling an entity, Hannes?
Yeah, there's always something to worry about, unfortunately. That's why there's always a buyer and a seller for anything in the market, especially in the listed space. So there will always be volatility. Where I do agree with you is geopolitics, and also this year, globally, close to 40 to 45% of the world's population will be exposed to some form of elections this year. So that all creates additional volatility. But given where we are, I mentioned where we are in the cycle earlier on, we've got quite high interest rates, and I think people are getting more and more comfortable that the next move from central banks globally will be to reduce or cut interest rates, and inflation is trending back to more acceptable targets, and therefore what was a headwind or a negative for equities or companies in general from an interest rate perspective potentially becomes more supportive, and also those that are willing to take the medium to longer term look and acquire to bulk up or through synergies or get certain exposure or distribution of brands or infrastructure. If you take that medium to longer term look, this is the part of the cycle where you need to look and do it. And as I said, with interest rates coming lower and growth potentially into 2025 accelerating, this is a bit of a cyclical low, therefore, in the growth space, and a cyclical high in the interest rate space. So even though there's volatility and uncertainty, that's exactly the opportunity for those that are willing to buy and position themselves correctly for the next phase, because the world goes through cycles. We are in a late cycle recessionary, and then the growth and expansion. There will be euphoria, and there will be the next recession, over which we will be worrying about and trying to do research about. But this is the opportunity for companies to do these acquisitions now.
Andrew, your thoughts on this one?
Yeah, I think it's, risk is one of those things that buyers always price for. And I think we have seen a lot of shake-up. A good example would be the Ukraine war with Russia, from being a darling of M&A, that being Eastern Europe, it was just, all of a sudden became a no-go zone. So there's redeployment in other directions. And yeah, it's interesting. In tough times, people buy and sell businesses, and in good times, people do it. And I think those multinationals that we're seeing on, through this cycle on a very aggressive acquisition strategy are clearly doing it now. So when we start seeing that recovery cycle, they hopefully can benefit from that growth. So yeah, I think the VUCA is a great descriptor. It'll never change. But I think where, never let a good crisis go to waste, as Winston Churchill said, there's always going to be opportunity if you prepare to look for it and you're prepared to take the risk. So yeah, I think interesting waters ahead for the next couple of months, definitely.
Well, gentlemen, it's all we have time for this afternoon. I'd like to thank you both for your time and insights. It's been fantastic. That was the Chief Executive at corporate advisory firm Deal Leaders International, Andrew Bahlman, and Hannes van den Berg, who is Head of South Africa Equity and Multi-Asset at 91.